We're in Q2 earnings season, and we've got two of the FANG stocks reporting, and those are Apple and Amazon, the A's if you will. So let's take a look at the charts heading into the earnings release for Apple and Amazon. Now, before we look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So let's bring up the charts and take a look at Apple first. So here we've got the monthly chart of Apple. So every candlestick here is representing an entire month of price action. Now you can see right off the bat that we are in a green bar here in July, lifting higher. And this is also in line with my RSI power zones. That's my favorite momentum indicator, lifting from what I call the bull support power zone. So this is giving a good sign for Apple heading into its earnings release date. Now let's just switch the time frame over to a weekly. So this is something called top-down analysis, where you go from a higher time frame to lower and lower. So I'm just going to do a quick look at the weekly chart. And in the weekly chart, you can see, yes, we are recovering on the past several weeks. And this is within the context of a move down from this high from the beginning of April. So it's still the next target we'd have to get to and exceed before Apple could really kind of take off. Along the way, there are some measurements that I would like to take. One is what I call the 50% retracement. This is a Fibonacci as well as a Gann number. Gann is G-A-N-N. Gann was a trader in the early 1900s who did excellent work on commodities and other markets. And one of the levels that was important to him was the midpoint of a move. So you can see right now on the weekly chart of Apple, we're sort of hanging out near that 50% retracement. This is with the RSI power zones on Apple back at the neutral levels, coming back towards the bear resistance power zone. So this then sets up the situation where on the weekly chart, Apple has more work to do, if you will, to continue going higher. Now let's take it down to the daily chart. So all I did was switch that same chart to the daily time frame. So I still have my 50% retracement, and if I want to, I can hook it back to the exact price levels to match. And now you can see there's more specific levels up ahead. Now, I'm going to add in more Gann levels to this analysis. And I detail my approach to my Gann trading levels and more in my Gann book, The Trading Methods of W.D. Gann, for which I have the second edition available. But you can see how the high here back on May 4th is very close to what's called the 75% retracement. And all of this is suggesting that if we are continuing higher here in Apple, even through the earnings release, that would be the next key level that would need to be broken above to make us head back towards those April highs, or technically the March 30th high. All right, so I've been talking about the upside on Apple. What about potential downside? Well, if we just remove this 50% line so that we don't get confused by cluttering the chart, and we zoom in here to a little bit more recent price action, you can see that we are heading higher. We are coming off of this June 16th low. And the most recent low that's now been established is yesterday's low as an important price low. So I have three types of lows that I teach: bar low, price low, swing low, and their corresponding highs: bar high, price high, swing high. And that's all detailed in my beginning education, starting with the winning price action playbook. Now, looking at the stock here, if it can stay above 150.80 and head higher, like I said, that 166.48 to 166.97 area would be the upside target. But that's within the context of it staying above 150.80. So if you were going to put a new trade on, then you would want your stop, your protective order, to limit loss on the trade to be at least below 150.80. It could possibly be further out depending on how much risk you can afford to put on. And your upside target would be, like I said, 166.48 to 166.97, applying my methods here. So what you just saw me do here for Apple is something I do for a variety of S&P 500 stocks every time I publish my stock picks, which is on average weekly. And those levels that are key are something that I've actually been bringing into the mix and providing not only with the ticker to go long or short, but what's the expected target and what's the stop. So this is the picture for Apple. I think we have a good game plan heading into earnings. Now let's take a look at Amazon. So I'm just going to change the time frame back to monthly and change the same chart to Amazon. All right. On this Amazon chart, we can see on the weekly time frame, right, every month representing an entire or every bar representing entire month of price action. We came back to these levels back here, which were old tops and old bottoms. Those are very significant when it comes to Gann analysis, and you can learn more about that specifically in the Gann trading pattern system. So the fact that we held this old top on a closed basis, right? Neither of these monthly bars closed below it is a good sign, but we're essentially consolidating or going sideways on the Amazon chart here for the past couple months. Momentum is not really giving me any huge information, so let's change over to the weekly chart. And while I do teach forecasting techniques as well, notice that I'm not bringing those into the mix right now. I just want to show you that as simple as price action and momentum, you can get a lot of information out of the charts. And when you layer in other pieces like Gann patterns and forecasting and more, then it just starts to let you see even more of what might be brewing so you're ready for the next move. All right, taking that Amazon chart down to a weekly, you can see that consolidation I was talking about in the monthly really sort of appearing here. And now we are seeing a bit of a lift up from the most recent low here in June 17th. So I'm going to draw something that might look a little suspicious to you if you're not familiar with my concepts that are in the missing trend strategy about Gann drives, and specifically a more complex type of Gann drive, which is in the advanced loss forecasting system. And I'm just mentioning where these different elements are because I know that some of you are brand new to my education here and you may want to know where you can learn more. Some of you are watching this video because you have already been diving into my materials, and by me mentioning where it is, if a topic is not so clear to you when you see it in this video, you can head back to it and brush up on it or make a note to look into it later. All right, so coming back to this chart here, you can see that 50% retracement is way up further. So let's see if we've already retraced 25%. And we have, but we've been sort of just swimming around that level, kind of hanging out with out closing above it. So overall, since July of last year, so the entire past year, Amazon has remained weak. And you can see it's been dominated by the bear resistance power zone and the bear support power zone. So coming into earnings, what more can we expect? Well, we have this very significant level right here at 128.99. It's a weekly high. So we'd have to climb above that to see anything further. So let's bring it to the daily chart and see more specifics about what that could be. So I'm going to just remove this 25%. I know we came there and started churning. We have the 128.99. And you can see there's this large gap from April 28th. And so that was the last earnings release, right? April, May, June, July. So Amazon can move a lot when there are earnings releases, but it doesn't necessarily mean it's going to gap. You just got to watch the technicals going into it. And of course, if you're trading Amazon, you should be aware of what the earnings release report actually says and the extra color around it. From the point of view of where we might be going if we break above 128.99, you can see that there's a what I call confluence of resistance. So a joining, a smattering, if you will, of price supply areas up here at 144.77 to 145.94. So it's not like it's going to go in a straight fell swoop, guys. Okay, markets move and meander and they wiggle and they've turns like rivers and lakes and streams, right? Same thing here, but we can at least have a broad target that we can look at. Now on the downside, there is a series of supports. I'm just going to remove this retracement for a moment. There's a series of support by various lows, all surrounding this June 14th level to the right and to the left. So there's a big floor of price action here. It doesn't mean it's going to hold forever, but it's where buyers are sort of living right now. Now, ahead of that is the level here at 106.01. So if we don't get above 128.99, then we could see further churning around in this consolidation, bringing us back potentially towards this 106.01, which shields, which protects this 101.90, this 101.26 level. So Amazon, if I was looking at the stock pick grid right now, wouldn't be a stock that's necessarily ready for a move higher because it's still within this wider range. Okay, you might have another classification. So I have a grid, it's like a tic-tac-toe grid where I classify all the different types of action that stocks could be in, and I manually, with my eyeballs, look at the S&P 500 stocks each week to see which are the best candidates. And I usually come up anywhere between maybe 15 up to 50 something stock picks. So Amazon and Apple are in the S&P, so I'm mentioning them because they would have been candidates potentially in my review. But the important thing is if a stock's reporting earnings or has some other activity around it, you want to know that. You want to be aware of that in the calendar for what you trade, but you still should look at the technicals and make sure you understand, especially where the key levels are, like I showed you here, what the momentum is doing, and then you can expand from there. Like I said, I didn't even touch forecasting or Gann patterns today. Those are other sort of layers in my cake, if you will, that make the analysis even more powerful. So now you have a good sense of what's going on in Amazon and Apple heading into earnings. Definitely look at the technicals for yourself. And if you haven't already, join my tribe where you can come and learn more about price and momentum, and I'll catch you on the inside. You can sign up at the link to join my tribe and get my hot, timely, actionable updates as soon as I publish right to your inbox.